This is a lecture from Open Tuition. For the free lecture notes that go with this podcast, please visit opentuition.com.
Alright, last sheet, and I'm sorry, but it's just, I said before, although each individual bit, I hope, is relatively straightforward, there's just so many different little bits they can ask. Here, standing questions 1 and 2, at least one of these, I doubt more than one, but still. The cost of capital, number 1, the cost of capital is 9%. It says, what is the present value of 4,000 first receivable in 1 year's time, and thereafter every year, with the last receipt being in 8 years' time? Now, make sure you're happy with the wording and read carefully in the exam. It's very easy to misread. But this one is telling us we're getting 4,000 every year, the same amount each year. Do we agree? And which years are we getting it? Remember the sort of shorthand, the way we write it. The first receipt is in 1 year's time. We then get it in 2 years, 3 years, 4 years, 5 years, and so on. The last receipt is in 8 years' time. And so do be clear, that's the shorthand for it, but because it's 4,000 every year, we're actually getting a total of 32,000 cash, you would agree? We want the present value, but instead of having to discount each amount separately, they help you when it's an equal amount each year. Tell me, what do we call it when it's an equal amount each year? Can anyone remember the name? There's a word for it. Alright, well, the word for it, which you could well use, is an annuity. The word annuity means equal amount each year. It doesn't affect your numbers, but clearly you could use the word. Well, as I said a moment ago, if it's an equal amount each year, they do help you. Instead of having to discount each year separately. Remember, that's what your other set of tables are. The ones that are headed up annuity tables. With annuity tables, they're giving you the total discount factor for any number of years at any rate of interest. And so here the interest was 9%. I've lost the question. Yeah, 9%. We've got 8 years. We want the total discount factor for 8 years at 9%. Have we all checked? 9% column, 8-year row. I get 5.355. Sorry, 5.535. 9%, how many years was it? 8? Yes, I am right. Irina? 5.535. Again, that's the total of all the factors for 1 year, 2 year, 3 year, and so on. But most efficient. Simply multiply by the total. The present value, therefore, is 22,140. So again, easy arithmetic. But I hope we're all clear what we're doing. Remember, the actual cash you've had is 32,000. 8 years at 4. However, after removing the interest for each of 1 to 8 years, the present value of it all is 22,140. Okay? What I'm not going to show here, we can check in a moment. I did show you 2 or 3 weeks ago, is do read carefully. Remember the annuity factors they give you for any number of years from 1 to anything. So this was the total for years 1 to 8. Had it been 1 to 10, had it been 1 to 15, you'd have used, 10 euro, 15 euro, whatever. Okay? Alright, very last one. Number 2. The cost of capital is 6% per annum. What is the present value of 8,000 first receivable in 1 year's time? And thereafter, every year, in perpetuity. So again, it's 8,000 every year. If the wording upsets, shout. But in 1 year and thereafter. So it's 8,000 every year. It's in perpetuity. Does anybody remember what that means? The word perpetuity, it is an annuity, it's an equal amount every year forever. So instead of being for 10 years, for 20 years, for 50 years, we're saying we're going to get 8,000 a year forever. Alright? The way we write it isn't particularly relevant to you because it's workings. So in workings, obviously, write whatever you want. But we say it's 1 to infinity. It's every year forever. If you are asked for the present value of these, this is the only time you can't use tables. An ordinary annuity you can. An individual cash amount, like on the earlier sheet, you can. Perpetuity is the one place you have to learn a formula. You've all forgotten, but last time I actually told you why. I think I was married to Ekaterina and got divorced. She obviously doesn't remember it. However, the formula, the discount factor, is 1 over R, where R is the rate of interest. I'm not going to waste time. You will not get many, if any, perpetuities, but if you do, it's one formula you must learn. It is not on the formula sheet. Alright? You multiply by 1 divided by R. In our question, what is it? 1 divided by... the rate of interest is 6%. Are we all happy? 6% is 0.06. Everybody? And although, I'm sorry, we always write it that way, surely if you're multiplying by 1 and dividing by 0.06, effectively on your calculator you are simply dividing 8,000 by 0.06. The answer to the nearest dollar. Is this right, please? 13333? And as I said, always do to the nearest dollar, unless you're told different. And read, you may be told to the nearest thousand, you may be told to the nearest hundred, you may be told to the nearest cent. Obviously do what you're told. Okay? Alright, that's just about all the numbers they can ask. Finally, I've put 2 words at the bottom, which I actually don't think can be asked. It's really relating to F5, which is the paper that takes all this further. However, there are just 2 words, and so to be safe, let me mention them. All they are this. Can you just listen for 30 seconds? I'll write 2 definitions. And on the previous sheet, I gave you a project and we worked out the net present value. Do you remember? And I said, always we base it on the cash flows. And you'll see, not F2, when you come to F5, there can be big problems estimating how much cash you'd receive each year. Alright? That's it, that's not your problem. However, if you're wondering whether to invest in a project, and you're using this approach, you're trying to forecast all future cash effects on the company. And these two words, which I say again, I'm not sure actually in the syllabus, but the relevance is this. A sunk cost, that's what we call something when we've already spent money. And what I'm getting at here is, suppose I'm thinking of buying a machine which will cost me 100,000. And I think we'll get back all this money in the future. But I tell you, I've already spent 10,000 last year, doing some market research or something. Well, if we've already spent money, it's called a sunk cost. And it is not relevant for the decision. You know, I've already spent this 10,000. That money's dead. I've spent it whatever happens. I'm wondering whether to spend an extra 100,000 on top. All right? However, a sunk cost. The other one, opportunity cost. Suppose I told you, it's a very quick one, so be patient. But suppose I were to tell you, at the moment I'm a desk factory. I'm thinking of buying a new machine to make chairs. Okay? So, okay, this new machine costs me 100,000. I think I'll earn money from chairs. 20,000 a year. But suppose I told you that if I buy this chair machine, I'm going to sell fewer desks for some reason. You with me? I'm going to start making chairs. People are going to buy chairs, but for some reason they'll buy fewer desks. And I'll lose 5,000 a year there. Am I making sense here? Well, if I'm wondering whether to buy the chair machine, I'll say, this is all the income I expect. But surely you'd have to take into account the money I was losing somewhere else. You with me? Well, if you're losing money somewhere else, we call it an opportunity cost. It is quite simply lost income. As simple as that. So you're not actually spending money, but you are losing income, so it is costing you. You would agree? And if doing anything is going to lose me income, it is relevant to the decision. So it's only those two words, and I'm sorry. The problem is, as you know, it's the first time, this time, that they can ask all these discounting questions in F2. And so it's difficult to be 100% certain whether she could mention those or not. I don't think those words can be mentioned. I might be wrong. I'd rather say a tiny bit too much than too little. Okay? So, since I've mentioned it, do those words make sense? There's not much to learn.